You're watching First Business Morning News with Tom Hudson, Angela Miles, and John and Pete Nigerian with a trade of the day.
Plus, invest like a king, or at least like the owner of a Dairy Queen. We'll talk about Warren Buffett. Well, there may not be that much, after all, that separates Warren Buffett from the rest of us. Now, there's a heck of a lot of money, let's face it. $18 stock that Berkshire Hathaway was 40 years ago is now worth $85,000 per share. John Price, though, thinks he's boiled Buffett down to the basics here. He is the chairman and CEO of Conscious Investing. John, welcome to the show.
Yeah, thanks very much, Tom.
So you've got a software system that, basically screens the stock market, is that right?
Yeah, it's really in two major steps. One is screening the whole market or sectors, looking for quality companies, the sort of companies that you might well hold for the rest of your life. And then the second step of the software is determining what would be a profitable price to pay for them.
Well, let's talk about, first of all, the criteria to identify value in the market. What are some of the bullet points?
Yeah, some of the main things is having a very high return on equity and return on capital. We tell people if you're going to invest in a company that only gets 2 or 3% return on equity, well, that's all you're going to make over the long term. Money can't come from nowhere. So good return on equity, good return on capital, not too much debt. Businesses that you understand. Buffett says stay within your own circle of confidence, your own circle of competence.
Do you look at book value at all?
A little bit, but not so much. We're really just interested in growth in earnings, growth in sales. As I said, not too much debt, high return on equity.
Any macroeconomic factors that you put into the model in that, for instance, inflation of the job market, a couple of things that have been battling this market?
Not really, because we're really looking at an investment time frame that goes beyond those sort of changes. You know, sometimes say, I don't know anything about the market. All we know about is quality stocks. So we're looking for quality stocks and ones that have had a history so that even when unemployment's been up, unemployment's been down, exchange rate's been up, exchange rate's been down, but something that these companies do goes beyond those changes.
And this is really a fundamental stock screener. What separates it from any other stock screener that's out on the market, John?
Well, we look at 10 years of fundamental data. So when a person subscribes to Conscious Investor, they're getting 10 years of fundamental data on 6,000 stocks. So the software, using proprietary tools, screens through that whole market, as I said, looking for those quality investments.
And without getting into some of the trade secrets, what are some of those proprietary models?
Well, even those simple things I just said before, sort of stable and strong growth in earnings, stable and strong growth in sales, high return on equity, high return on capital, and then finally some proprietary tools to calculate what would be a good price to pay for
Okay, that's where the proprietary, because the return on equity isn't proprietary.
No, it's not proprietary,
but
when we do it in such a disciplined way, it makes a difference.
So, John, let me ask you here, though. Buffett has $44 billion in cash. He's said that he's had a tough time finding value.
Unbelievable.
Is the model finding a tough time finding value?
Well, he's in a different position because he has to invest $1 billion at a time. Imagine that. And so the universe of stocks that he can choose from is quite a lot smaller than the universe of stocks that you and I can choose for. That gives all the data, the 10 years of data.
John, thanks so much. We appreciate your time today.
Good, thanks, Tom.
John Price, the chairman and CEO of Conscious Investing.